This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Asian spot liquefied natural gas, LNG, recorded its second weekly gain since the end of August, amid concerns over supply disruptions due to geopolitical tensions and lower feed gas volumes at U.S. terminals undergoing planned maintenances. The average LNG price for December delivery into Northeast Asia LNG has rose to $13.80 per million British thermal units, MMBTU, up from $13.50, MMBTU last week, industry sources estimated. Prices are holding firm, with the market continuing to balance at high levels amid ongoing demand and geopolitical tensions, said Alex Froley, senior LNG analyst at data intelligence firm ICIS.
Oil prices settled higher on Friday and gained 4% on the week, with investors taking stock of the ongoing conflict in the Middle East as well as the U.S. election next month. Brent crude futures settled up $1.67, or 2.25%, at $76.05 a barrel. U.S. West Texas Intermediate crude settled up $1.59, or 2.27%, to $71.78. Brent settled 4% up on the week, while WTI settled 3.7% higher on the week. Really, it seems like the market is bouncing around in a holding pattern till we get an answer to some of these questions on Israel, the war and the election, said Phil Flynn, senior analyst at Price Futures Group.
Moving on to the top news in the energy sector.
India's monthly crude oil imports in September dropped about 8% to their lowest since February at 18.56 million metric tons, government data showed on Friday, while product exports soared to their highest in 2.5 years on low domestic demand. On a monthly basis, crude oil imports were down 8% from 20.18 million metric tons in August, data from the Petroleum Planning and Analysis Cell's website showed. Imports rose about 6% from the same month a year ago. In September, imports of crude oil products rose 2.7% year-over-year to 4.17 million tons, while product exports jumped 34.6% to 6.49 million tons, their highest level since March 2022. Product imports were about 4% lower from August levels, while exports climbed 27.5%.
Utilities in the United States have relied on fossil fuels to generate a larger share of electricity than their counterparts in China since June, seriously undermining U.S. claims to be a leader in energy transition efforts. U.S. utilities have relied on fossil fuels to generate an average of 62.4% of total electricity production for the past 4 months, according to data from energy think tank Ember. That fossil fuel share exceeds the 60.5% over the same period in China, the world's largest power producer and polluter. Next, we have the top news in metal markets. Steel demand in China, the world's largest producer and consumer, will likely flatten or dip slightly in 2025, industrial officials said, warning mounting risks facing steel exports due to growing trade frictions. Oversupply due to demand dropping faster than supply has weighed down steel prices and hurt profitability among steelmakers, some of which ship more cargoes abroad. China's apparent steel consumption in the first 3 quarters of 2024 slid 6.2% year-on-year to 688 million metric tons, the state-backed China Iron and Steel Association told reporters on Friday.
Gold prices edged up on Friday after recovering from a profit-taking bout as Middle East tensions and U.S. election jitters supported prices, while palladium prices extended gains to 10-month highs. Spot gold was up 0.2% at $2,741.50 per ounce by 1:44 p.m. Eastern Time, 17:44 GMT. Prices hit a record $2,758.37 on Wednesday and logged a third straight weekly gain. U.S. gold futures settled 0.2% higher at $2,754.60. The fact that maybe something is going to happen this weekend between Israel and Iran could have triggered some safe haven buying going into the weekend, said Bob Habercorn, senior market strategist at RJO Futures.
We will now look at the top news in the agricultural sector.
Euronext wheat slid to a one-month low on Friday as signs that Russian wheat remained competitive overseas, despite government steps to regulate prices, dented export hopes in Western Europe. December wheat on Paris-based Euronext settled down 2.1% at €216.75, $234.16, a metric ton. It earlier dropped to €216.00, its lowest since September 20. Wheat traders have been grappling with Russian initiatives to regulate exports, including reported minimum export prices and restrictions on which exporters can sell Russian grain.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.